Assalamu alaikum and welcome to the Legends of Takaful, a podcast series proudly put together by Actuarial partners celebrating 40 years of Takaful in Malaysia. So, who is a legend? It's easy to look back and see who is a legend, as hindsight is 2020. But what about the current leaders in Takaful? Who will be the legends of tomorrow? In this series, we'll sit down and have a conversation with pioneers and founders of Takaful in Malaysia. People who truly shaped the industry, going beyond the numbers and finding out what really inspired them, their challenges and struggles, as well as their insights. We truly hope that this will both help drive Takaful forward for the next 40 years, as well as assist countries in just starting out with Takaful. In the first 10 years of Takaful, there was only one operator, Syarikat Takaful Malaysia, or STM. Anyone entering the STM office during those days knew things were done differently. The first time I went to a meeting with the CEO there, Dato' Fazli, I even remember having to take my shoes off at the entrance of the floor. They had a monopoly at that time, and they focused on establishing a presence, rather than having the cheapest rates and fierce competition. Back then, the loss ratios for motor business were noticeably better than conventional insurance, which was surprising due to the small size of STM, and the need to be large and strong enough to control the workshops. STM used Bank Islam branches as the main distribution source. The second entrant was Takaful National, or TN, the Takaful operations of the national insurer MNI. TN is now Etika and focused on agency force distribution during those days. Those days we had heavy debates on whether it was acceptable to have agents selling Takaful, promoting actually, as how the model would work, as until that point we used a Mudaraba model, with the operator paying most expenses out of surplus sharing, which occurs at the end of the year. Several years later, Maybank obtained a Takaful license, and TN eventually combined with Maybank Takaful to give rise to Etika, which had a full lineup of agency and bancassurance distribution channels for Takaful, as well as conventional insurance. During the same time, the first retakaful operator in Malaysia started, Actuarial. So whereas the first operator relied on bank branches, and the second operator relied on its existing agency force infrastructure, Takaful Ikhlas, starting 10 years after TN, had to start from scratch. This led the CEO, Dato' Said Mohib, to drive a number of innovative solutions, including bringing the Wakala model over from the Middle East. This represents roughly the halfway point so far of the Takaful journey in Malaysia. Several years later, the era of the multinationals in Takaful began, with a range of global insurers and reinsurers recognizing the potential of this market. Prudential in particular brought synergy to its products, creating Takaful equivalents of its conventional insurance products, especially unit-linked plans. This was also the time that Bank Negara really strengthened the regulatory focus on Takaful through JPIT. Regulations were held fairly consistent between Takaful and conventional insurance, with the goal of creating a level playing field. Today, Takaful is at a crossroads in Malaysia. Although we've come a long way, we still have a long way to go to rival conventional insurance in Malaysia. Will Takaful focus on consistency with conventional insurance? Or will there be increasing innovation in the models used as well as market segments focused on? Will we be able to use Takaful to increase insurance penetration in Malaysia, especially underserved markets? Insurance in any form is about managing risks and building trust. Takaful can truly be key in many market segments in building this trust and forming the foundation of a population that understands its risks and how to manage them. This is the foundation of true financial literacy, which must be a goal for the next 40 years. Actuarial Partners has been involved since the beginning of Takaful in Malaysia and has been involved in some way with all the Takaful operators here. We truly hope that this podcast series is useful and the next 40 years of Takaful development is equally exciting. Malaysia boleh. Assalamu alaikum. Welcome to part 2 of our discussion with Zainal. In the first section, we talked quite a bit on a lot of the aspects of being an actuary in Takaful, the earlier days, some of the unique aspects of what was going on at that time. So for this part 2, let's talk a little bit more forward-looking. So let me ask a sensitive question to start out with. We'll start off with the sensitive. Because Salahuddin was talking about working together as an industry. So if you could stand in front of MTA, Malaysian Takaful Association, and tell them a few key things you would love for them to do to bring the Takaful industry forward, And let me be clear, Takaful industry is doing fine. It's doing good. It's progressing. But like we mentioned in the last session, you have two separate market segments. You have the replication segments, which is similar to conventional. But then you have new, you could call it new market segments, inclusive insurance, inclusive Takaful segments, something new and different. If you were going to stand in front of MTA and give them a few key things, what would you say?
Well, I think first of all, you need to understand that MTA is an association of Takaful operators. It does not have its own kind of ability to actually tell Takaful companies what to do. It basically goes on the basis of consensus, right? How many votes for, how many votes against. So it's difficult for Takaful, the MTA, effectively to direct, impossible if you like, to direct the Takaful industry. But I think it's trying to do its best in terms of trying to maybe change, if you like, in terms of what is it that the Takaful industry needs to offer. The VBIT, value-based Takaful, take out the I, because I is insurance, VBT, if you like, value-based Takaful is one sort of direction that it's taking. But I would say that, if it's possible, it's actually, because you see, in the Philippines, for example, when they offer Takaful insurance licenses in the Philippines, you have an option to start up a mutual. So I think, in order for, in terms of the current setup of Takaful, it's very, very difficult to actually return to the roots of mutuality, because Takaful is not new. Takaful basically is a mutual, and the mutual has been around for hundreds of years. Insurance started off as being a mutual, basically owned by the insureds, if you like. It's only subsequently when, capitalists found out that they can make money out of this business, they started up, the way in which insurance companies are now with shareholders' capital. But there's still some huge mutuals out there. In Japan, in the US, in the UK, it's dwindling a lot. So return back to its roots. Be a mutual. Yeah?
So we need to talk to Bank Negara as the regulators in terms of
Yeah, and I think after because it's driven by regulation. So how can we actually establish a mutual in Malaysia so that we can return back? Because that segment is there in terms of the the Takaful industry they currently have. It will do its work, for that particular market segment. But, in order to address the other issues, it's very difficult to use the current kind of tools that you've got in the conventional side and in the traditional side of Takaful to actually go for the underserved market.
Okay, interesting. So another thing was, when you interviewed Izam, he talked about the J wallet, the Jannah wallet. I was smiling over that. There's a backstory to there if you're curious. When I was his actuary, he appointed actuary when they were starting up HLMT. So we were even talking about sales illustrations. He said, Hassan, you have these sales illustrations, and it's always talking about dunya, the world. So this is how much money you're going to get in the future, your projections. Shouldn't we also have a section there for pahala, how much benefit you're going to be getting in these sales illustrations? So this idea of J wallet's been percolating for quite some time. But how do you think an actuary get involved? I mean, we're talking about the J-wallet. People should understand that there is a religious aspect of being involved in Takaful, in purchasing Takaful and being involved in all sorts of products. As an actuary, is there anything we can be doing, especially in underserved segments?
Well, first of all, you need to look at the perspective of J-wallet that Izam Shah was talking about. I think he was effectively referring to the fact that, sometimes you see Takaful being more expensive, or a Sharia-compliant product be more expensive than conventional. So he was going to say that, conventional product, similar product is 100, but Takaful is 120, right? So if I buy the conventional product, it's cheaper. So it's e-wallet, you get e-wallet 100. But if I buy the Takaful product, it's more expensive. So maybe 100 is your e-wallet, but 20 is your J-wallet. That is basically for you, for Jannah, as it were, is it? So then it goes back to this whole principle of Takaful being risk sharing, and that effectively, it is basically for the purpose of helping each other. And this goes back to the concept that, what you contribute into the pool is tabarruk, and that tabarruk basically is a donation, and that donation basically is for someone who is in need. So I think this goes back to what we mainly discussed before in part one, was the fact that an actuary, if you are you're not a Muslim, then you might not appreciate what Jannah from the Muslim perspective is. You see, and for a Muslim, basically, I think one of the legends said, we live life to prepare for death, as it were, right? So for Muslims, basically, this is temporary. Right? We also need to actually plant our seeds in the Jannah, in the hereafter, in the heaven, if you like, you see. So if you have that kind of understanding, then you understand. This goes back to asset share, I mean, now we're talking about
pahala asset share. I love that.
Whether effectively you have to be fair in insurance, in takaful, and if you apply asset share for takaful, it might not be appropriate. I'll leave it at that.
Interesting. Yeah. I mean, especially in underserved segments, because one thing people always say when we talk about underserved, or people that don't have, in Malaysia we call it the B40. You get the T20, the upper 20% of wage earners, the M40, the middle 40%, and then the B40. The B40, they have no money for insurance or takaful. It doesn't, it's a segment of the market where there's nothing there. But then if you think about it, nearly every Muslim pays money into this thing called khairat matian, into the local mosque or surau in the area. Almost everybody. I mean, the work that I do in the low-cost flats and everything, even the poorest of the poor is still paying money there. And there's some takaful coverage there. So if the mindset is a little bit different, the mindset is on the J wallet. You're doing something which is for, something for the next world. You're helping each other and whatnot. Maybe there is some room for.
Well, then you have to go back on the concept of Islam, Muslim as an ummah. Ummah, from the perspective that we're part of of one body, right? And therefore, we're all brothers, as it were. I mean, that from that perspective, with the karat kematian. Of course, there's a couple of things there. One is that the pool is in the mosque that you are a member of, so you trust everybody in the mosque, right? So you must have the same element of trust in takaful, between the takaful operator and basically the takaful participant. Another one as well is the benefit is not guaranteed. Whatever is in the pool, we give it to you. But unfortunately, if you go for takaful and you say it's guaranteed, then already that becomes a technical aspect that actually has to got to take into account of. So, karat kematian is more of a social kind of a pool, but when you try to formalize it in takaful, there are many technical challenges that we need to overcome. But the communication part of it is important. You cannot basically compare takaful insurance, because then your mind will mentally go to comparing price. What is conventional price? What is takaful price? Then you're actually now going in a different direction, because it is not risk transfer. The money that you go does not go to the operator. The money that you go is split. One goes to the operator and the other one goes to the pool. So what you should be asking is that, what is the wakalah fee? Right? Okay, that company charges me X dollars wakalah fee. That company charges me Y dollars wakalah fee. What services are they providing? What goes into the risk pool is secondary. Well, that is your donation. The more that you donate, and this is where Islam is coming from, the more is your J wallet.
Yes. Especially in certain market segments. Some market segments, okay, they're replicating conventional insurance products.
Yeah.
There is an element, like if you have a conventional insurance arm and a takaful arm, you do need some sort of consistency to avoid, agents doing funny things, or there's things you need to do. Totally understand that. But there is some underserved segments where what you're saying is absolutely true. We have to do more in terms of changing the mindset, changing it into adding services.
Yeah. I mean that's true. That's why it goes back again, that you have to be innovative. If you really want to make a difference in takaful, you have to be innovative, especially when you want to go to the underserved market. You need to think about it. And I think now, as Muslim actuaries, I think we have probably an advantage of a non-Muslim actuary in terms of innovation. Because first of all, we believe in it. We believe in the J wallet, as it were, and we believe in that, what basically God basically teaches us, because we were sent to this earth basically, for a reason, and we were told that, look out for revelations, and then when revelations come to you, that's best for you basically. But of course, in terms of interpretation, that differs from person to person. But where I'm coming from is that we have to go on a holistic basis.
Yes, yes. And to be precise, people with a respect for the uniqueness of Takaful, uniqueness of Islam, and using Islamic values, which isn't necessarily Muslim. I mean, for instance, Munich Re, when they're developing Retakaful, there was a number of German, Tobias as well. I mean, they had a very strong respect for the pure Takaful nature. And making it one pool helping another pool, there was a lot there. When we started developing Takaful in, say, Nigeria, one thing that was funny was that in Nigeria you have a Muslim area, the northern part of Nigeria, and then there's more of a Christian or non-Muslim area in the south. But when the first Takaful companies were coming, it was the non-Muslims that were buying in Takaful because they saw it as good value. It was a value. So the value system was there. Whenever I'm talking to a company interested in Takaful in, say, Africa, wakala is a bad word for some. They don't like the word wakala or agency. As soon as you say the word agency, there's a negative connotation in some market segments. Whereas if you start talking about mudaraba, working together and everything, that's a different mindset, and that had some value. Just as an aside. Allow me to ask one question. You were talking about the product and whatnot. One challenge is that you said, okay, you just look at the product, how much wakala fee they're charging and whatnot, and then is the wakala fee fair for whatever it is that you're getting for that? What about surplus sharing by the Takaful operator?
Yeah, I mean, surplus sharing.
Not halal haram, but
from a technical perspective. Okay, we have to go from a technical perspective. Sometimes you see surplus sharing as a marketing tool, right? So surplus sharing as a marketing tool is different from surplus sharing from a technical perspective, right? Because over time, the Takaful companies in Malaysia has built out lots of, some of them, not all perhaps, lots of retained surplus, as it were. You see, in conventional insurance, that retained surplus belongs to the shareholders, all right, because it's risk transfer, So you have this what we call the estate, and the estate can be returned back to the shareholders, as it were. But that surplus in the risk fund, can be distributed, and some companies have actually distributed that surplus to new, current, existing policyholders, participants. Which from the perspective of fairness, you might argue, is that fair? Because that surplus was actually generated from previous policyholders or previous participants, yet you're giving it to current participants. And this could be a marketing thing, if you like. Because when you price for it, you did not price for a surplus to actually emerge, you see. So a surplus, I think that's another thing as well, as I mentioned just now, surplus by right should be determined over the duration of the contract. If the contract is 12 years, you should be determining surplus over 12 years, not every 1 year, because you're not quite sure whether the surplus that emerges that year is actually surplus or just claims volatility, right? True. So there are many things that you have to consider when you want to actually distribute surplus. But one thing I think that's important is that, if we treat it as the tabarruk, then effectively it's a donation for not just current participants in your pool, but also future participants. And this is where VBIT comes in, specifically for Takaful, because the surplus that we generated in the fund could be used for, for participants who are in the lower income group who can't actually afford the contribution, So that I think is the difference between surplus in Takaful and surplus in insurance. That the surplus in Takaful, which are often surplus, can be used for good things. Go back to the helping, the underserved, the poor, as it were, all right? But how you define surplus is important.
Okay, and you mentioned something interesting. So let me just, off the cuff, okay? There's no right or wrong answer. You talk about restaurants. There's some restaurants which say, here's the cost of the meal, but you can actually put something up on the board to say, okay, this is a free burger, this is a free rice or whatever. And if somebody really needs it, they can use it. and you also said that when you're talking about sales illustrations and marketing the product, you would mention that there is surplus distribution, but you wouldn't actually say, okay, we're projecting it to be, this is how much surplus over time. What percentage of participants do you think would actually accept if we said, okay, it's up to you, this is opt-in solution, but we're not going to give you any surplus distribution. We're not going to keep it, but we're going to use this to help people in the underserved market segments. So the J Wallet again.
Yeah. Well, when you do insurance, you don't have much time with the participants. You just say that, look, this is the product, these are the benefits. I'm telling to explain to them the difference between product with surplus sharing, product without surplus sharing. I think it's going to kill the business to some extent.
Well, that's exactly it. So instead of talking about surplus sharing, if there's extra, you're going to donate it. You'll sign off and you'll donate it up to.
Yeah, then that could be one way. But then Ben Negara would say you must give the policyholder an option. So you cannot just simply put it there. You have to give an option.
It'll be
so it becomes a more complicated process per se. And then you have to have separate takaful fund. This is with surplus sharing. This is without surplus sharing. I think go back to basic principle. Basically, this is tabaruk. This is donation. And then when you do this, not like we did before in Takaful Malaysia, whereby we got margins because of the fact that we don't actually know what the experience is going to be. I think it's going to be fair, all right. But you price it such to be instead of 50th percentile, maybe 75th percentile, and then the idea there being that you have the 25%, if you like, in terms of volatility. And if it actually becomes out as surplus in the end, you use it to help those who are in need. And also, if you like, it becomes a feature of takaful. If you want to actually say, I want to have surplus sharing, then you price it as such. Instead of charging 100, you charge 110, a bit more. So you can have both. You can have basically, price at 75th percentile, but with a 10% kind of surplus sharing, because sometimes people like that feature, right? But in many ways you can skin a cat, as it were, but it depends on what is it that you want to do in terms of products.
Okay, that could depend on different market segments as well as to what
but do not say that you have to do asset share when you have surplus sharing in takaful, all right? Because the whole idea, asset share means the money is yours, you see? But the money is not yours anymore. You're given a donation, and that donation is for the people who are in need. The fact that you don't claim is good because that means now you're still alive, or your car did not go in an accident. You should be grateful for that. The money that is in the pool is for the people who needs the money.
True. And we could talk for a while in terms of, what more we could do to get that thinking lined up. For instance, there's Christian insurance companies, which
it's not unique to Muslims as well.
Not Muslim. There is Christian insurance, and for instance, there are things such as you'll get a list of who in your area has actually claimed, and that you can pray for the person, you can go to the hospital and visit them. But as an aside, there's a lot of things we can do here in terms of different market segments. Okay, you've brought up some points which are sort of relating to something called IFRS 17. This session is IFRS 17 is not covered under this kind of a podcast, but I did want to bring it up in that the past couple of years we've been focusing hard on IFRS 17 for takaful. IFRS 17 is an accounting standard, and it's talking about how we make financial statements look and everything, and going beyond that because we don't want to get into IFRS 17. That could be a totally separate podcast. But from a takaful point of view, it's about truly understanding what is at the heart of takaful. For instance, you talked about fairness, you talked about asset shares. One thing I like to ask people is that, okay, you have conventional and you've got takaful. For a participant, which one is more fair? A participating conventional product or a takaful product for the participant? Which one is more fair? The answer is clear, but almost everybody gets it wrong. Conventional par product is more fair, not takaful. When we talk about takaful being fair, nobody said takaful is fair. Takaful is not about being fair. Takaful is about people helping people. Plain and simple. People helping people. So if you have people helping people, like what you said, it's not just the current generation of policyholders. So why do we have retained surplus? We have retained surplus so that this year we had a good year. Less people died. There weren't any massive floods. There weren't whatever. We had a good year. Save some of it. You can help next year's participants. But what if you had a really bad year and there's losses? Something called card Hassan. Card is not, an injection from shareholders or the operator to the participants. It's very simple. It's next year's participants helping this year's participants. When you have a card, the expectation is that the company is operator is going to get it back. So this sense of sharing and working together, people helping people, to me that was really at the heart of IFRS 17 and a lack of understanding. What is your...
Well, two things there. Okay. The first one is the frustration that me personally have when talking about IFRS 17 for Takaful. Because the idea was that because of the fact there's this card mechanism, right, by default it's risk transfer. And with risk transfer, you are like a conventional insurance company, you have to follow IFRS 17, tick all the boxes. That was a very frustrating part for me, because people were looking at it from the basis of what the rules say without understanding the principles behind it, right? So anyway, that card is the culprit, as it were. People not understanding the card as you explained it. I think going back then, the other issue in terms of fairness or otherwise, people forget that when we talk about fairness in insurance, fairness in insurance is a bit different, because let's talk about risk-only product, whether it be life insurance, term product, or general insurance, one-year product. Who talk about fairness? When you buy the product, you know what the price is. You can shop around what the price is, all right? And then you pay the price. And then later on, the insurance company makes money. Hey, not fair. Can you give us some premium back? You don't get that, all right? So that's not fair. That's the whole idea why Takaful was actually promoted, because in insurance you have this, the insurance company have got all asymmetry of information. The insurance company has got all the information. The policyholder does not have much information. He only knows pay this premium, and you might claim they'll pay it for you. There's no fairness there. You have fairness in insurance, and if you like, this asset share and all that, in participating policies. Those are savings products. So when you talk about fairness in insurance, you're talking about fairness in terms of the investment return on the savings component of your par product. All right? But in Takaful, we already split the investment to the savings component to the participants' account or the risk, and then the rest goes to participants' risk fund. And the participants' risk fund belongs to the policyholders, the participants, if you like. And if there's surplus there, it does not go to the shareholders. It's basically for the pool. It's for future generation of policyholders. So, all right. So I think from that perspective, it goes back to the issue that from the risk premium perspective, it's a tabaruk. And don't talk about fairness because, as I said just now, you go to insurance company, you pay the premium, you can't, the insurance company won't give you a share of their profits,
Okay. Let's move on. Izam also talked about VBIT, and you've mentioned this a few times on VBIT. And that this needs to be, he talked about, you need to have real differences in development rather than just a checklist. And this was something that I was part of the initial work group from MTA, which went in and we had a long session with one of the banks to say, okay, this is what the banking sector is doing, and how do we port this over to Takaful? And very early on, we realized that there weren't that many similarities. If you're a bank and you're going to give money to underserved segment, everyone's going to say, wow, thanks so much. I love getting money. That's a different story than saying, hey, give me money and I'll help you with your risk management. It's a totally different segment. So again, if you were going to stand in front of the industry and give them a guide to truly making a difference through VBIT, what would you say?
Well, I think, the VBIT part of it goes back, first of all, a couple of things. One is from the perspective of the poverty premium. It's something I sort of presented, at IFOA conference in Malaysia a couple of years back. The idea there is being that, the poor actually pays more for their risk premium, for their insurance cover than the more wealthy ones. because there's a perception among insurance company that if you are the lower income group, you are actually more likely to claim, higher risk, if you like. And maybe partly it's true because they got the data. So the whole idea here in terms of VIBT is actually to try and correct that a bit, to make sure that the contribution, the risk tabaruk, if you like, that you pay, effectively reflects the risk. But more than that, VBIT is also the utilization of surplus in the risk fund, which I said just now, does not belong to the shareholders, right? It belongs to the existing and future policy or the participants in the pool to help finance, if you like, this kind of event. So in a way, it's like your zakat money, as it were. Your zakat money, when you pay zakat to your lembaga zakat, they use the money, they collect the money, and they use it effectively to help those who are in need. So maybe, your house burnt down because of fire, and then you got people there, the owners don't know where to go, so zakat would actually help them, So here in this case now, if you've got insurance, takaful, then takaful will help those people who have lost their place of living, So in a way, the funding of VBIT, and I think that they are going and thinking about this, it also could be from other sources, like zakat money, infaq money. The whole idea there is that, instead of the government helping the people who need the help, you got the ummah or the community helping those in need. So that's a difference, if you like. So VBIT is trying to see how that can actually be implemented, whereby the funding for the loss does not come from government, but comes from the community. Right? I think from the government perspective, I think they'll be happy with that. But I think from the perspective of us in the community, it also is our responsibility as well, because we are also the one that funds the government. We pay taxes, as it were. And the resources that oil and all that are owned by all of us collectively as Malaysians. You see. And here is that we have the opportunity to direct some of our funds that perhaps we have paid government, because government say, okay, you want me to cover this, pay more taxes, then I'll cover this. So we basically have control over how we use our surplus cash as donation to help. So the funding of the VBIT is going to be more than just in terms of surplus in the risk fund, but the delivery the delivery vehicle needs to be thought through carefully, whether it should be the existing takaful funds or perhaps it should be a separate takaful fund, maybe an industry takaful fund.
Okay, interesting. I mean, I would argue that this also comes down to risk, financial literacy. If the government is forever giving you money when there's a loss, there's very little, you don't understand.
That's a good point, actually, because the issue here is that you can make it a condition. If you want to be covered by this VBIT, you have to do proper risk management yourself. For example, health insurance, right? In terms of helping the poor, in terms of medical needs. However, if you want to be covered by this pool, you have to take care of yourself. No smoking. You know what I mean? For example, exercise. Don't take sugary drinks. So in a way, it's the risk management. So if you satisfy those conditions, anything happens to you, we will help you from this pool. So it's risk management, which government cannot do, but maybe you as a community, you can do it.
Okay, interesting. Okay, we've been talking about different market segments and how to help the underserved. Zainuddin talked about protection gaps and protection gap study, and he talked about takaful can be used to solve those gaps. First of all, do you think takaful has been successful so far in plugging these gaps?
No, I don't think so, because it goes back in terms of distribution. I mean, takaful, apart from the compulsory you have to buy anyway. So whether you buy takaful or conventional, that is for you to decide what is price, or service. But from the perspective of the underserved, first of all, they don't have money. Nothing is free in life, basically. So that's why VBIT comes in. So in order to plug the protection gap, you need also to have the funding vehicle behind it. How are you going to fund for it? So we need to address the two concurrently. As we actually become a more developed country and whereby our income goes up, so it could be a start. You might provide this as an initial so-called free cover, but because then they understand, the benefits of it, then, when they do get more income, when they become more sort of have surplus cash, as it were, then they will think about getting better kind of coverage. Because, I like to tell a story, in terms of, I think it was in India, whereby, over there, basically, there used to be that you buy fertilizer from this company, or they'll give you free umbrella, you see. And then one day they say, no more free umbrella, free personal accident cover. So umbrella, of course, it rains, you got umbrella. So effectively, after 3 years of free umbrella, no, I don't want it free umbrella of sort of a personal accident anymore cover, because they didn't claim, you see. Right? The chances of claiming on a personal accident maybe 1 in like 20 years, no. I want the umbrella again, you see, because they don't appreciate the cover. They don't see the value of the cover. So this understanding in terms of financial is also part of financial education, as it were. So we need to educate people in terms of the value of this kind of protection before they can see you have a gap. If they don't actually understand the protection aspect of it, you can tell them that there's a gap.
Okay. There's a lot to unpack with what you just said.
Yeah.
Okay, so super interesting there. I mean, they prefer their umbrella, rather than personal accident. Part of that to me is having fairness in your profit margins. There's certain products are very, very profitable. We know that. And you need those market segments. Like myself, when I go back to the US and everything, I pay a small fortune for the coverage, the travel coverage. But if you're going to go to the US, you need the
medical,
the risks are too hard. The risks are too high. You need the coverage. I know I'm vastly overpaying for this thing, but they have me over a barrel, so to speak.
Yeah.
You could argue there's a need for us to be fair. And Zainuddin brought this up. Remember he talked about this.
Let me just interrupt you there. I think the issue in terms of fairness there, I think Zainuddin was referring to the fact that, whereby you have a situation whereby, the profit the shareholders get, is perhaps a bit too big, is it? And that, in terms of Takaful as well, you've got the wakala fee. Maybe the wakala fee is too big, basically. All right. But the issue here is that, you should be looking from the perspective of, are you are you making it affordable? So I won't say fairness per se, I would make it affordable for the market segment that you go in. Because remember, we have this thing called tabaruk. And I also remember Daud Taylor. Daud Taylor, he said to me once, Zainal, I don't want to make money from the poor. So when you go to the underserved segment, those are people, who probably earn, 5% of what you earn, in your job, and you're making profit from them and to pay your salaries, you know what I mean? So he was thinking from the perspective that, if you want to provide something for the poor, do it for free. To the extent that, you don't charge anything for yourself. Whatever it is that you charge them is only to pay for the claims, you see. That's where it was coming from. But of course, in real life, that doesn't work, you see. You do need to make money, and shareholders need to actually make money and tell the management that you have to price it such that, I can actually make my money. So that's why I go back again just now, perhaps now, in terms of move forward in terms of VBIT, you need a different kind of vehicle, and not actually depend on the current kind of model that you've got for the Takaful operators.
Okay, that's fair. And you also mentioned affordable. I would just point out that affordable and cheap are two separate words. Yeah. We had Perlindungan Tenang, and efforts being made to find cheap insurance products and Takaful products. The challenge we found is that if you look at, when you have a 1-year term insurance product, it's for any actuary would find it very easy to look at the cost of this product. You know how much it costs if somebody dies for one particular year, age 35, this sum assured, it's clear. And when you look at how much that is compared to the total premium rate or contribution rate, it was a very small number. So like you said, they'd rather get their umbrella rather than not claim for 20 years because that's the way the product was designed. Whenever we're in micro Takaful or micro insurance conversations, this is golden rule of about 60%. You have to be able to pay back to your customers 60%. If you
loss ratio is 60%.
Loss ratio is 60%. Yes, claims ratio.
In total, claims ratio is 60%.
Don't talk about expenses or anything else.
Still low.
All of that, but it's better than you currently see. I mean, 70% is a better number, but you're at least 60%. And that's a hard, when you talk about these small-sized policies, that 60% is actually...
Because expenses are fixed.
Yes.
There's not a percentage of premium.
That's quite a hard target, actually. Okay, now another thing you mentioned about these real losses. So these market segments, people having real losses, and we're trying to protect them against their losses, but how do we connect in the government here? So let me explain. So you have like the mortgage reducing terms, the fire coverage, the motor coverage. Those are clear. There's a clear connection here. But if you talk about a lot of other risks that people have, if they don't have proper risk management, if they don't have proper takaful coverage, if something happens, they're going to become, they'll become the true needy and depend on government handouts for them to survive, which is not good. Like you say, it's our tax dollars being used to cover them. So is there a way for government and takaful to sort of work together here?
Yeah. I think pelindung tenang, I mean, I guess it was trying to address the issue of affordability because the poor basically, you do not have the additional income to actually buy cover. But I think the way the pelindung tenang was put together, maybe it's just version 1 perhaps, I mean, you can spend some time sort of arguing what should not be done. Okay? But it is an effort that we have to actually, applaud as far as the government is actually aware of the issue. But perhaps, we need to rethink in terms of what is the role of government in this. Regulations is the easy one. Maybe in terms of regulations, by looking at regulations from a different perspective, perhaps we can actually encourage, the growth of real risk sharing, and perhaps in terms of funding for the poor, we can talk about zakat funds per se, but it has to be driven by also regulations. So the government, sometimes government acts in silos, even the regulations as well might also be acting in silos. So we need policies which are basically favorable to actually have different kinds of operating models that actually will allow for this kind of different kind of funding and different kind of benefits. A rethink, if you like. And I think one big issue is in terms of medical insurance, medical inflation, how to actually provide good cover, for the poor, that the people who are in upper income group already take for granted. But anyway, these are big issues. I don't think we can actually settle this now. But maybe more thinking, and this is public-private partnership. But a lot of thinking needs to be done in terms of how best to coordinate, regulators with government, with the private sector.
Okay, I mean, there's a lot it's exciting from an actuary's point of view. This is actually a very exciting topic because how can we actually, one thing is getting to the underserved, but another one is helping them to help themselves.
Yeah. That is risk management. We talk about affordability, that's paying money, but actually, risk management is 9/10. So risk management 9/10 of the whole. 90% of risk management is actually preventing.
Yes.
So even you actually counsel the poor in terms of how to manage their health. So you don't need to go for treatments which are expensive, as it were. So that is free. The part of it, the 1/10 whereby you got the insurance cover, that costs money, you see. But the 9/10 of it is free. You can do it yourself, you see. How to actually counsel them to take that risk mitigation kind of effort.
Precisely. And this is totally connected in with some of the Islamic principles. I mean, the famous hadith we always talk about is tying your camel first.
Yeah.
So if you allow everybody to let their camels wander around everywhere, and you give them, pay them if their camel gets lost, how expensive is that going to be?
Very expensive.
If everybody has to tie their camel first, and then if you got one of those crazy camels that can, bite their way out, okay, now you're covered. Just extending out from that is we did a project, a CSR project with dealing with elephants in Sabah and everything. It's the same kind of concept. I mean, we'll talk, in a minute about how to get to that market segment, but risk management. Because one comment that you talk to the smallholders there, it's like, we don't have money for electric fences. And then the more you dug in, the more, okay, but what some places can do is they put these wires or ropes there with a loud siren which goes off. A human walks under it, no problem. But an elephant will just push right through it, the sound will come off, and at least you know the elephants are in your neighborhood. You do what you need to do without killing them or everything. So there is risk management aspects that we can do. But talk a little bit about agro, the agro business. Because Wan Zamri talked about, the other Wan Zamri, Wan Zain talked about, the special needs of this market segment. And how do we do this? I mean, you talk about public-private partnerships and everything, but
Yeah, I think the problem with people in agro sector, the people involved in agro sector, is also compounded by the fact that their income is uncertain. I mean, if the harvest is good, they get income. Harvest is bad, not much income. So when you have insurance or takaful, you need to have the contributions coming in. So it goes back to affordability. So I think agro in takaful is something that is is needed to actually, if not replace, supplement what the government provides in terms of assistance to the farmers, because food security is very important in any country per se. So in terms of trying to come up with some kind of an operating model for the agro takaful, thought needs to be given in terms of how you're going to actually get people to subscribe to this plan, how you're going to fund for the benefit, and ultimately, whether you can actually get to the size of the pool that will make it self-sustainable. Because yes, you need government assistance, but over time, you hope that the government assistance will reduce. So it is something which is quite challenging. I think currently they're looking at that. So we'll see how that goes. Because here again, it's also important that we get all the stakeholders on board, the government, the regulator, Bank Negara, and of course, the participants, because they need to appreciate, why it is important for them. Going back to the umbrella, I mean, it goes back to this concept of tabaruk as well. You are actually not expecting something immediately, but you've got this protection. So in case you need it, you have a source of help, maybe like from this tabaruk or this agro takaful fund. Right? So that's how the thinking is.
Okay, I mean, I would just, a slight comment would be, it's not so much the government is going to be paying less and less, but people are managing their risks more and more. So the real losses will be reduced, in my opinion.
Well, but effectively what you're trying to cover is against natural disaster, but there's a certain element of risk which you can manage, So that is where the risk management comes in. So with climate change, for example, you don't put your farm, if you like, near an area whereby it's subject to flood. You put your farm somewhere else, and there's something that is quite logical. But sometimes people don't actually think about that. So once you've got agro takaful fund, for example, you can put in conditions with which you can be covered. So you have to do certain things in order to be part of the pool, as it were, and that is very, very important, because otherwise you'll be forever looking at government giving you handouts, and forever you'll be claiming, because what you're doing, you're not doing much in terms of managing your risk. Maybe you could also have like no claims discount. If you don't claim, you get a discount to encourage good behavior.
Or additional services to create a win-win situation with them.
Yeah, but you have to make it sustainable over time.
Okay, interesting. We've been talking about new market segments in this particular segment. Now, you've been involved in all sorts of countries. I mean, I happen to know about Indonesia, Brunei, Sri Lanka, UK as well, Saudi, Sudan, Nigeria, Turkey. There's all sorts of countries here, not to mention the World Bank work and everywhere else. What lessons do you have there? Is there anything which we can say, Sri Lanka does a great job at this, and this might be a different way, or it's takaful, and...
Well, my involvement in all those projects is not just takaful, it's insurance as well. But I think it's been very rewarding. I think, I've been very fortunate that effectively I've been able to continue learning, as it were. You never stop learning, when you're in consulting in particular. But I think what I do appreciate is the fact that different country is different. And whenever you actually go in and you want to do something, you need to understand the whole ecosystem, so that what you actually provide in terms of consulting advice is something that actually is supported by the ecosystem that they currently have. So there's some appreciation, if you like, if that you would have, if you understand where the risk lies, basically what support is required in order for something to work. You see, just now we talk extensively about setting up Takaful in a developing country. Perhaps you should have the one model, because in terms of financial literacy, it's not so great, so people can differentiate between one model and the next. You see? And then we talk about in terms of products as well. So this comes about because of the fact that you take into account everything. So yes, you have a set of tools. As actuaries, you're trained with a set of tools, but how you apply the tools in different situations is driven by your understanding of the risks, by your understanding of the conditions in the country, right? So for those actuaries out there, I think this is something that you need to actually keep in mind. Yeah.
Okay, interesting. Now, you talked about the whole ecosystem and whatnot, but we can connect that to regulatory consulting. I mean, you started off as a consultant to Bank Negara before they exploded in terms of the number of actuaries. Then later it was Bahrain Monetary Authority, World Bank in a number of countries, and now more recently Jordan and Maldives. What are some of the lessons learned, or
Well, I think as far as regulators are concerned, they need to be aware. Again, go back. I can't but go back to the very important aspect is to understanding the ecosystem. I mean, I use the word ecosystem freely here, but it's not silo based, is where I'm coming from. So in order to do that, you need to appreciate, also put yourself in the position of the other party, and why is it they're doing what they're doing? Is it because of the regulations we're putting in place? Are we giving them the right message, as it were? Sometimes when you put the regulations out there, the regulations might give you the market the wrong message. Sometimes it's a case of basically the regulator not understanding what the issues are. I give a simple example is when I was advising the Bahrain Monetary Authority in terms of Takaful. They were basically puzzled, in terms of some of the Takaful company in Bahrain. They were actually accumulating a lot of card, all right, a lot of card, and it's basically a card. It means that effectively the risk fund is inadequate to actually pay the claims, and they're wondering, why is this happening? And when I looked at it and explained to them, it's simple, what people do there at that point of time, it was many years ago. Things have changed since then, was that, the Takaful companies are looking at conventional companies, big ones, and they say, oh, okay, this product, car insurance, how much do they charge? $100. Okay, $100, we'll charge $100. And then they say, okay, what about the wakala fee? Oh, what is our expenses? Our expenses is so much. Okay, how much do we need in terms of wakala fee in order to actually pay our expenses? Okay, $60. So out of $100, $60 comes to go to wakala fee. While the conventional company, in terms of the expenses, might only be $10, $20. So what do you expect? You have a loss in your risk fund because of the fact you're taking too much in terms of wakala fee. All right. So once the regulator understand that, then they went about to ensure that you don't charge a wakala fee that is too high, such that the amount that goes into the risk fund is inadequate. Our regulator, of course, they are aware of that. And that's why in our regulations, you can take your wakala fee, but the actuary has got to make sure that whatever's left over when it goes to the risk fund is adequate.
Yes, there's two separate pricing.
Yeah,
by
two
right
separate
in
pricing.
Takaful. The risk fund pricing and the shareholder's point of view.
Correct. Yeah.
Okay, interesting. Let me ask. It might be sensitive. I don't know, but something which is close to my own heart in terms of what about Bangladesh? We spent a few years doing project to help out Bangladesh and whatnot. You were helping the regulator as well in terms of understanding things and through the World Bank. How do we get Takaful to succeed in Bangladesh? I mean, it's such a difficult experience there. And this could be just like any other developing country, right? You don't have, even if you have, for instance, Islamic assets and whatnot, the returns are going to be so much lower than conventional banks and investments for whatever reason. It puts them at a severe disadvantage. Awareness is...
Yeah, well, I mean, okay, let me address it in you know, again, holistically. I think the issue of Bangladesh is actually the whole economy. The whole economy is a bit of a mess. That's why we have the recent upheaval over there, you know, and to some extent, you know, that is not conducive, to a great extent, that's not conducive to setting up a professional, you know, insurance industry, right? I mean, when I went there, you know, it was amazing. The fact that, you know, sometimes insurance company will not pay out claims. These are death claims, you know. They will not pay out claims, you know, although the person's died, you know. And, you know, what the dependents got to do is go and complain to the regulator, and then the regulator will tell the insurance company to pay the claims. So that is a big problem that we've got in terms of the country, all right? So I think the issue is that it is very difficult to look at it by itself. You have to look from the perspective of the whole economy to make sure that, you know, you have the kind of right environment with which, you know, this can develop, you know. So enough said, because we can talk a lot about that.
The whole ecosystem.
The whole ecosystem per se, all right. And, you know, and also we need to have the, and I think one thing as well that I think Iza mentioned, you know, he have 4 legs of a table. I have 3, you know, the stool, is it? But the 4th one that he mentioned, well, for those people who do not know what those stools are, and the legs are, if you like, is of course, Islamic financial market. You know, sorry, the banking, Islamic banking, Islamic capital market, and of course the Takaful sector, the Takaful market, as it were. The 4th one is talent. So the issue, I think, as well in developing countries, Bangladesh as well, in particular, that there's very little talent that can actually, in insurance in particular, and what else in Takaful, firstly, because you need to have the talent with which to make it a success. And in terms of Malaysia, for the first 9 years, you know, obviously we have Takaful Malaysia, and the people there were learning about Takaful, and then subsequently we got IFIM, we got INSEF, you know, we got, you know, courses in universities, you know. So you need to have the infrastructure to develop the talent in order to make it a success. You know, you cannot just simply throw something into a country and hope that it will grow if you don't have the supporting infrastructure to actually assist it to actually be successful.
That's true, quite fair. Okay, a different topic. Ismail talked about retakaful windows versus full-fledged. I mean, closing our eyes to the Sharia side of it. That's none of our, let's keep that totally aside. But what about actuarial side? About having we talk about Pakistan, Indonesia, but in general.
Takaful or retakaful? Retakaful.
Let's talk about takaful.
Takaful.
Let's talk about takaful.
From which perspective again?
You know, because you have Indonesia, which is phasing out the idea of takaful.
Windows. Oh, you talk Windows, yeah. I think the Windows aspect of it is one whereby you want to introduce takaful quickly. All right. So when you do window, then you already have got insurance companies around, and they can quickly actually establish a window, takaful window, and they already got the distribution in place. So the idea there is that, you know, you can actually fast forward and actually generate a takaful market, as it were. When you do stand alone, it's more difficult. You need the capital, you need basically the systems and everything. You know, it takes time. So in many countries, in Indonesia is one example, is whereby initially they start out with Windows because they want it to actually, you know, it's a big country, huge country, and that's one way to make it, you know, to actually establish the industry, as it were. But now they're actually switching to standalone because standalone is more Sharia compliant, and then standalone as well means that you have the ability to be more innovative in terms of more focus, in terms of your offering, as it were. I think in terms of Pakistan, they started off with standalone, but then, you know, there was legal issues, and then they moved to Windows. But the problem with Windows is that, you know, yes, you might be able to get the business, but I don't think in terms of development of the market, you still be a step brother or step sister, if you like, to the conventional arm of your operation.
Well, that's a good point. I mean, I understand what you're saying about the expense side of it. Is it, to be technically precise, if you can have a shared services agreement and you can share your expenses between several different, you only need one sort of legal team for claims and whatnot. You don't need one for Takaful, one for conventional. Certain expenses you can easily share it between different conventional and Takaful and whatnot. But in terms of getting into new and innovative market segments, you would imagine that would be
It would not be a priority. Because one thing as well, if you get more money, shareholders getting more money from the conventional product, what is the incentivize for you to grow your Takaful window? There's no incentive. Because I sell more. If I sell the conventional product, I get a profit to the shareholders of every $100 I get $10. I sell the same product for the Takaful window, I only get $5 in terms of profit. Regulation says I got to keep the same capital. There's no incentive actually to sell the Takaful product. You have control because it's your window basically.
True. It's more of a defensive strategy.
It's more a defensive strategy. You're actually trying to defend your market rather than trying to actually develop the market.
Different market segments. Okay, that's fair. Now, at the very beginning, you mentioned retakaful rather than takaful. Can a pure retakaful operator really succeed?
Retakaful is a very, very difficult question. I mean, we have several retakaful companies sort of run off in the Middle East because they were not successful. And we don't have the time to go into reasons why they're not successful. But I think go back again is that it's not simply a question of copy and paste. And then I'll go back to another issue which is fundamental, which I think maybe people sometimes do not appreciate. Because Takaful is about risk sharing, then the way it works best is where you have high frequency and low severity. I mean, the claims are actually, you can predict.
Yes.
All right. If you have low severity, low frequency, high severity, it does not work because you need a lot of volume of business, in order to actually take the volatility, and that doesn't work. All right. So you transfer that to retakaful, and if it's low severity, low frequency, high severity, you have some years very big claims, some years no claims. Whenever there's no claim, you have to pay surplus refund. Oops, next year that's not actually a surplus. It's the other direction. You have to pay a card, So again, it is a very difficult kind of a problem that we have in terms of retakaful, how to make it actually a success. Again, we don't have time to discuss.
That's right. That could be a long discussion.
That could be a long discussion, yeah.
How to move forward. Okay, so just a few last sort of big picture questions.
Yeah.
So moving forward, the next 40 years in Takaful, what can we do to help Takaful push into underserved market segments?
I think we have to really look at the Takaful model, because this Takaful model is serving this segment well. All right, is basically in the same sphere, if you like, in terms of insurance, conventional insurance. Because you have to bear in mind, insurance companies sell insurance products that the insurance company wants to sell, not necessarily what the market needs. And you might argue that for Takaful as well, what the Takaful operator wants to sell, because it gives them the profit, they will service their capital, not necessarily what the market requires. All right. And you can't force the shareholders to think otherwise. It is not in their DNA, basically. So in order for you to do differently, you need to relook at the model. You need to look in terms of who should be the shareholders, if any, or to address that kind of market. All right. So you need to look. Unfortunately, you need to rethink. How to actually go to Takaful version 2.0, as it were.
Okay, that makes sense. That makes sense. So the industry as a whole, it's doing good in its replication strategy in that certain market segments. But if they want to get into new and underserved and other market segments,
other products as well. It could be medical products, for which is becoming more and more expensive now. You have to rethink in terms of the model. You got to look at the ecosystem.
Is asking about medical Takaful beyond the scope of that? That's a heavy question.
That's a heavy question now, yeah.
Okay, fine. Any other thoughts on the whole Legends of Takaful series, or?
No, I think, as I say, it's a timestamp, right? We've already lost quite a few legends already, because we've gone meet the maker, but they've done well in terms of their contribution to the industry. So the whole idea of documenting, the experience the first 40 years for the benefit of the next generation, I think is a great idea, and it's something that, I mean, when you present something, to two people, the response will be different. But that's good, because that means that they are thinking about it. We are not here to tell people what you should do or you should not do, but we're telling them, through this series, what they have to think about. Now, if they've thought about that, then what is their niyat? What is basically their intention, right? If the intention is to do something in a particular way is good, then inshallah you will actually be successful. If the intention is to do something not so good, well, basically, that's the way it is. Because we're all humans per se, we got our own sort of needs, as it were. So I think it's good. We have documented some, not all, I think, some of the challenges that the industry faced the last 40 years. So now we want to pass the baton to the next generation and let them actually think about it and let them decide the direction they want to go.
Okay, excellent. Any last advice for actuaries just getting involved in Takaful? Or?
I think one of the things I have to say that for many folks, I mean I'm coming up to what I started work in 1978, so nearly 50 years now in terms of as a so-called budding actuary and as an actuary per se. So I've been very fortunate. I'm grateful for the opportunities I've had. Being the only actuary helped at that point of time in terms of securing business, especially in consulting business. Sometimes you have to compete on price, which is not very, very fun. And people don't know. Actuary signature is the same. How do we know that? It's the case again. In the case of you got 3 actuaries offering this particular service. This is the cheapest, so we go for the cheapest because they understand. How do you actually value an actuary per se? But anyway, I think going back to this point is the fact that it's a rewarding profession, and you have a lot of learning opportunities because of the fact that when an actuary thinks about a problem, it thinks of it in 3 dimensions, and that one extra dimension is time. Right? We don't look at solutions now, but we look at solutions which are also which will actually allow us to actually make it such that whatever we advise, is sustainable over time. And we also look in terms of causes. We don't look at the effect, we look at the causes. Then once we know the cause, then we can address how to actually manage those costs. These are the risks.
Okay, interesting. So I think that covers everything we wanted to talk about. 2 series, 2 parts to Zainal. Zainal talked about learning and education quite a bit there. Just a little bit of aside for people that don't know. Learned AP has a whole series of courses on Takaful. So we have the basics of Takaful, the more advanced course on Takaful, IFRS 17 for Takaful, pricing and product development. We've been talking about creativity, innovation. Just as an aside, this is available for you if you need it. So thank you so much for being involved in listening to these 2 podcasts. I'll pass back to Zainal for any last thoughts.
No, I don't have any last words. I hope last words sounds a bit too ominous per se. Okay, so I think as I said, it's been an exciting journey. We have this Legends of Takaful conference coming up, or maybe when this is published, it's past already. All right. So hopefully we can actually think as an industry together in terms of what should be the step forward, because it goes back to your intention, your niyat, basically. So inshallah we'll be guided in our way forward.
Okay, thank you so much.